This is the Equity Management Academy Mean Reversion Trading weekly podcast for June 20th, 2022. Gold. The Fed is in the way. Summary. The 10-year note has been volatile recently as a consequence of the Fed's announcements to raise rates 0.75%. It's the biggest increase in 28 years. The Fed has been behind the curve since 2021. Now, interest rates have sharply reversed, contrary to the Fed's expectations that inflation was going to be transitory. Fundamentals. The 10-year note has been volatile recently as a consequence of the Fed's announcement to raise rates 0.75%. It is the biggest increase in 28 years. The market has been dictating monetary policy, not the Fed or central bankers. The Fed has been behind the curve since 2021. The Fed claimed inflation would be transitory. It has been the opposite. The amount of money in the system has hit record levels. The Fed balance sheet is more than $9 trillion, doubling in the past few years. So we have a lot of money in the system, which is negative for the purchasing power of the US dollar. The record amount of stimulus that came into the economy took a toll on the whole economy during a time when interest rates were at almost zero. People could borrow basically free money and invest, pumping up prices that led to inflation. More money is chasing fewer goods. Now, interest rates have sharply reversed, contrary to the Fed's expectations that inflation was going to be transitory. Not only is inflation not transitory, but at the same time, Russia invaded Ukraine, which eliminated a significant percentage of food, such as wheat, corn, and sunflower oil, and other commodities, such as oil and natural gas, off the world market. Fertilizer, which affects food stocks, have also been sharply reduced by the war. I think we have seen the consequences yet, relative to what has come in relation to global supplies. Equity Management Academy CEO Patrick MontesDeOca said, the bond market is dictating where interest rates should be. Interest rates have risen more than tenfold in about 24 months. Stocks and digital assets have experienced a massive amount of liquidation. The NASDAQ is down about a third. The stock market is in a bear territory. Digital currencies have seen a major washout. All of it is a consequence of all of the speculation that came into the market during the time of easy money. Now, rising interest rates have popped the bubble of free money, catching a lot of people who were highly leveraged in a highly vulnerable condition. It is probable one of the best things that happened to the market. Millennials have learned a major lesson in the markets. They were probably responsible for much of the speculation, especially in digital currencies. Money that was chasing a quick buck has learned a major lesson. Economic systems do not change overnight. The policy of changing energy, such as crude oil, to green energy is going to take some time. The political implications of green energy is also a major factor in the inflation rate that we have, such as crude oil reaching $120 a barrel. Our debt of more than $30 trillion and debt to GDP ratios of more than 130%, if not more, add to the stress on the global economy. Now, prices are coming down to levels that are extremely attractive for strong buyers. Standard deviation and mean reversion structure NASDAQ. We use the Variable Changing Price Momentum Indicator, VCPMI, which is based on standard deviation to determine when a given market is at an extreme level above or below the mean, and therefore is likely to revert back toward the mean. For the NASDAQ, we are at an extreme level of support below the mean of 11,068.50 based on the weekly VCPMI signal. The market has activated a buy signal. It is 90 to 95% probable that we are going to see a reversion to the mean. The target of the weekly signal is 12,193. We follow the VCPMI regardless of the fundamentals. In stocks, the sentiment is extremely bearish, and the technical data appear extremely bullish too. The VCPMI, however, is a contrarian and is recommending buying the market. If we get above the VCPMI of 11,549, we are going to be in a daily bullish price momentum with sell level targets of 11,630 to 13,055. We are holding long positions in the NASDAQ, and it appears to be reverting. Gold. The market made a low on the 14th of 1806. The weekly buy one level was 1807, which we published last Saturday, June the 5th. Gold activated that buy signal, and the weekly mean was the target of 1860, which was completed. The daily targets of 1831 and the weekly buy one trigger was at the 1841, all of which were activated. Now the weekly signal has been completed. We saw a perfect reversion to the mean, MontesDeOca said. Once the market completed the target, the VCPMI went neutral. And if we close below the sell level, then it activates a bearish price momentum with a target of 1841. Now that level is being completed. Now we are looking to activate a weekly buy trigger from 1841. Once the market goes through those levels, they become support. We have a buy signal again, and the market is likely to move up again. A close above 1841 at the end of the 15-minute bar will activate a weekly buy trigger. Silver also completed a pattern. It did not quite come down to the weekly level, so it has shown more support than gold. Silver appears to be leading the way to higher levels from higher lows. The pattern shows a reversion from an area of accumulation to a new high, and then coming down to test the buy one level of 21.53. We could be looking at some major opportunities in these markets, MontesDeOca said. The markets appear to be massively oversold, which suggests we are into the areas where we have some major buyers coming in.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ematotrade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC-PMI algorithm. The VC-PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC-PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC-PMI? The VC-PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC-PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC-PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.